Okay, welcome back, guys. Anybody that's new, if you're interested in stock market technical analysis and trade ideas, I really do try to put out trade ideas that I see where there's setups, and I usually try to put the ideas out before the trade actually happens so that you have an opportunity to profit on the trade if it works out. So I'm always scouring the markets looking for those setups and for ideas that hopefully are profitable for everyone. So if you're new, so hit subscribe and you'll be able to get more of those information. Also, take my trading course. That's in the description below. That will give you guys the skill set that you need to evolve in technical analysis. It's $99, so it's a fair value. Let's get right into it. Nasdaq Futures. All right, so here's the trend line that I have on the futures right now, just this uptrend line. We broke it, but it's not impulsive. It's just drifting sideways. So until I get some sort of impulsive action on the Nasdaq, I just don't see any trade there. Here's the corresponding triple Qs, just kind of hanging in there, just drifting sideways basically. There's no impulsive action. We're not being rejected instantly off resistance, and we're not, you could say we're holding support and consolidating, and maybe we're going to move higher. If we do move higher on the Qs, here's the daily chart. If we run up and make a new high, pop above this 30, it's about 303.30, and do it anytime soon, then it's going to be a divergent high. So you can see down here my RSI, it will run up and maybe look something like this, tagging up here, creating a divergent high where you'll have a higher price and you will also have a lower momentum indication as long as it turns down shortly thereafter. We also have this green trend line, which is really the 2020 rally that this thing's been in. That broke back here. We did a back test, and if we want to run up and maybe do something that looks like kind of another back test, then we'll run right into major resistance with a negative divergence. That sets us up for possibly being the top of the market. So again, I don't know which way it's going to go. Could break down here, could go up higher. I'm just waiting for additional signals on this one. Here's your S&P 500 futures, ES, chopping sideways. So I think we need to break this 358 or 3584 in order to set in motion some sort of a sell-off. Until then, we're just consolidating, kind of chopping sideways. Until I see further indication of a reversal or anything, then I would say the trend is still up. Here's SPY. SPY bounced off of support. We continue to make kind of marginal new highs. You can see here we made a high here. It was sold directly into. Now we're just kind of up in this area consolidating. So we could be building energy to move higher, or we could be stuck at resistance and gonna break down. If you look at the daily, though, we do have negative divergence right here on the daily. Now, it's not confirmed because the PPO hasn't crossed over. You want to see this blue line cross back below this orange line right here to confirm this divergence. And then the RSI obviously will continue lower. And if that does that, then we will have a divergent high, which is this price action right here. Divergent highs are highs that are made on lower momentum, and they have a high probability of failing. So we're waiting for further confirmation that this is going to prove to be a divergent high. If not, then we could obviously move a little bit higher up to this 375 area on SPY. And here, let me show it right here. It's all the way up here, and that is that major trend line that I have going back to 2009, where we've got lots of reactions on this chart. Several reactions we broke in 2018. Got rejected there in early 2020, and we just keep back testing from underneath. So I think eventually one of these is going to fail. That's why I think we're in a bull market, or a bear market, not a bull market. Here's your bull market, above trend, trending higher. And here's your topping action here, which can take years. I mean, obviously it's the longest bull market in history. So, we're topping out for many years, and then I think we are going to break lower. Obviously, we can continue higher, but we're below this trend line. So each time we get up there, it's most likely going to get rejected. Small caps, IWM, it doesn't have negative divergence anymore. You can see right here, we had it right up here. This was a divergent high, but recently they bought into that dip and continued to break it higher, and it's now burned through the negative divergence. So bullish in general. That's the only thing I could say. Now we do have this uptrend line right there. You can see we're just kind of walking up this trend line. So as long as we're above that trend line, bullish, and a break below, then we'll start to look for sell signals. But there is no negative divergence on this one anymore. Gold here on the hourly chart, we continue to just drift lower since August, really drifting lower on this trend line right here. We had a brief breakout, which looked to be the real deal, but got sold into, and so that's your bull trap right there. And now we're just kind of flagging out. I think I really do think that we're heading down to this 1790 level, and there's a potential for a bear flag right here. We got the flagpole. We maybe are making a flag something like this, and then we break. If we break to the downside, that puts us to a tag of 1790. So that's where I think it's going. You can see the miners here starting to sell off a little bit more. Here's Barrick Gold selling off. This is what I'm expecting to happen. So I'm expecting gold to, the miners might front run the move in gold, but a move down in the miners, and then gold running down to that 1790, 1800. And then we'll start to look for bullish setups in the miners, because I think that will be a buying opportunity for a lot of these miners. Agnico Eagle, you can see selling off, really just downtrending. So again, what we'll be looking for is we're going to look for bullish divergences start to show up in these miners once we get that sell-off in gold. And that's what I'm expecting. XLV here, we've got, let me get rid of this line right here. We have negative divergence here on the hourly chart. I think it's also on the daily. Let's look. Yeah, it is on the daily. Coming back to here, slightly more prominent on the hourly, obviously. But we have this trend line, and we're right there, starting to kind of break below it. But again, my trend line could be off. We could adjust it down. Just give it the benefit of the doubt and go right there. And so we're waiting for an impulsive break of this trend line, and until we get that, it just continues to move up this trend line. Now if we break, or when we break, I suppose, if or when we break, we've got these gaps along the way, so we should find reactions along these gaps, at least probably this first gap for sure. Tag it, maybe run up, tag the bottom of the trend line, then break down, and then the second gap, and then if we break and fill both these gaps, I'd expect we're going to head down to 97. So I still think that's going to play out. I'm looking for a move down to 97. The fangs aren't doing anything. They're basically flat, and that is concerning because the fangs are basically the leadership. Without the fangs, if they're going to just stay flat, the market's not going too much higher. So just understand that. If you're not seeing the fangs rallying, the market's not going anywhere. It can move a little bit higher, but it's going to be a marginal move. Microsoft, being sold into, Amazon, they're all kind of flat. They're not being sold hard. They're just kind of flat today. So keep an eye on that. Something to point out, corn, C-O-R-N, which is a agricultural commodity. Here's this big down channel that I have. And it's been, really in place since 2014. So a big bear market basically in corn. I'm starting to watch this for a potential break of this channel to the upside. Seeing a lot of, inflation, and it doesn't even matter if we get inflation. It's just if investors are expecting inflation, then things will price it in. But you can see here that we've really just headed straight up, and we're right there at resistance of this channel. So a definitive break, some sort of a impulsive bull market break above that would be a buy signal, and potentially a longer term buy signal that sets this thing up for a bull market basically, or a new bull market. So I'm going to be watching for that, and if that does play out, that's going to be I'm not going to trade this one. I'm going to just start accumulating a bull market position, which would be a long position, and would be something that you just hold for a while until you start to see signs that the bull market's over. So again, that's a longer term setup, but I'm watching for it. Okay, Nvidia could have a trade on our hands here. I think it's to the downside, but we'll see. We've got this is an hourly chart, so we have a bear flag right here. Here's your flag, and you're looking for a break, a definitive break to the downside. Now, if that happens, that sets this thing up for a move. Well, I would say it's probably to about right there. We should get a reaction right there at about 475. And that would be a move from where we're at of about 11%, 11.5%. So that's the trade that I'm watching for. I'm just waiting for that definitive bearish breakdown. We might get it today. You can see we've just been coiling within this triangle. So we're going to break one way or the other. Hopefully it comes today, but maybe it'll come in the overnight session. And so something to watch there. This one, if you look at the daily, big negative divergence, or it really on the daily, and it's so that forecast that this is going to continue to the downside, and this, I really think we're probably going to go lower than the 475 if we break to the downside. Most likely going to hit 433 or potentially 396. But we still, just to zero it in on the tightest time frame I can, the hourly, looking for that bearish breakdown. That's the way I think it's going to go. Sometimes what they do is they'll pop it above here, they'll gap it up, and then sell it off real hard, and then it'll break. So the gap up, tricks anybody who was short too early, and then they sell it off. So watch for both of those scenarios. Here's Draftkings. Now, Draftkings, we had, this looks like a bear flag right here. And what they're doing is they broke it to the upside of the bear flag. I see this as a pretty low, there's a high probability that this price action up here fails and we move down back into the flag and then to the bottom of the flag, and most likely breaking the lower end of that flag. Now, it hasn't happened yet, and on the hourly chart you can see, if I can kind of adjust this like this, we're still above that flag. But if you go to the daily, you can see that it's just marginally above, and watch for the daily close. I think that'll be your tell. Towards the end of the day, where this thing's going to close at will give you a good signal maybe in terms of if this is going to stick and move higher, or if it's going to recover that flag and break down. A recovery of the flag would be a bull trap, and that means that this thing's most likely going to have the selling pressure to break the bottom of the flag and head down. This thing can go a ways down. The flag, here's your flagpole, and the measured target is about down to 1850 or 2520. So those are both profit target areas that I would be looking for. If it turns down soon, then you'll have negative divergence here on the hourly. You can see it right there. If it keeps going higher, you're going to burn through the negative divergence here on the hourly, and it will no longer be there. So watch for all those setups. Qualcomm is interesting up here at this level for adding to any short position or establishing a short position. Here's what I like about shorting Qualcomm up here. It keeps moving higher along this channel. You see this price channel? I could extend this out, but we didn't have any data points. But you basically have this price channel, this bull market price channel going back to March of 2020. And every time we tag the top end of the price channel, it gets sold into. You can see we gapped up. This is where we gapped up after earnings, and we're tagging it, selling into, and we're coming it back up to it. If it sells off anytime soon, it's going to continue to be it is a divergent high right now. So you can see right there, less momentum on the hourly chart and higher price right here. So divergent highs have a high probability of failing. So if this gets rejected anytime soon, that will have proven to be another divergent high. And if I'm trying to short something when there's bearish technicals, I like to add or establish shorts at resistance with negative divergence in place. Okay, so this one looks like it's going to start to set up GPS gap, and you can see here on the daily, here's your clean uptrend line. We've just had several reactions along this uptrend. We have negative divergence in place. You can see that it's clearly in place here where we have a lower momentum this high right here was a divergent high, and it was sold into. You can see when it made that divergent high, they sold it down. We then made another divergent high right here, and yet we're getting less momentum right there. You can see it. So it's showing up on the, it's not showing up on the hourly yet. There's no negative divergence on the hourly, but it is there on the daily. So what does that mean? Well, I think that we're going to have a, come down to the trend line basically. Tag the trend line, and then there we'll wait and see what happens. So the trade idea that I kind of like, it's not the best trade idea, but is a potential move down to the bottom of the trend line, tag it, cover any short position there, and then wait for an impulsive break of this trend line to reestablish a short. XOM, here's oil. Continues to move up towards the 41 profit target or price target. So I'm still looking for that to continue higher. This one, we got long this down here at the breakout and added down here. So it's a highly profitable trade. Even from the breakout, if you took it, it's up 15% or so. So it looks good. And I think it's heading up to that 41. And that's where I'll be looking to cover, is somewhere right up there. I don't know. You got to step in a little bit early. I wouldn't just wait for 41. You do have to step in a little bit early. Tesla, you can see here, I'm no longer in this position. I re-shorted it yesterday, but today I basically covered it for break even because they are popping it back up into resistance, and you can see we're starting to, it broke out basically. So that's a breakout. As long as that sticks, then that will be a breakout where most likely you're going to hit the all-time highs and probably continue higher. So nothing in this chart that I see as bearish right now. Now, if this fails right here, then that would be very bearish. But if it continues and it can hold, then, it's bullish. So watch for that. And that's really all I got. So I'm going to get the video out. Thank you all. Catch you on the next one.